Hello guys, it's Max here from Daily Market Movements, and in front of me we have the gold over the US dollar market. As you can see in today's trading session, it has been rather choppy. Pre-market we went down as low as 18.19. We nearly come into contact with the 200-day EMA, which of course is that blue line on your screens. But since then we've paired our losses and we've recovered, and we're now trading in the green ever so slightly on the day, up at 18.47. If we were to close anywhere around this area on today's trading session, then we would have formed a hammer candlestick, which is typically a bullish sign. So going into Tuesday's session, if we do close around this area, I would expect us to go and trade back up towards the 50-day EMA, which is just around the 1875 to 1880 area. Medium to long term, I'm still very bullish on the gold markets. Fundamentals are looking fantastic. Technicals are looking great as well. We're still in a low interest rate environment, and the Fed has come out and said that that's going to continue for the next, minimum two to 3 years. So we're very well supported. There continues to be a significant amount of money injected into the US economy with regards to stimulus deals. We've just had one, and I think Joe Biden's planning on having another stimulus deal, which will be worth over $1 trillion. So there's plenty of fundamental reasons as to why gold should go up. Of course, we still have COVID, which is spreading more than ever, which is very, very, very concerning indeed. And then, of course, the technicals, we find ourselves trading in this holding pattern. We have experienced a false breakout, which no one likes to see. Many traders would have got hurt last week. I did myself, but it doesn't really matter because as long as you have good risk management, you should be able to shrug a loss like last week off. And we've had such a fantastic year in 2020 in the gold markets. As it's been a new bull market, it really wasn't much in terms of when you look at the bigger picture. So 200-day EMA, which is the blue line, is the support in this market. I don't believe the gold markets will fall below there. If they were to get a daily close significantly below the 200-day EMA, then we're likely to go and trade towards the bottom of this holding pattern, which is down near 1720. That would not be good at all for myself and the rest of the gold bulls out there. But from my perspective, if we can close around this price, that means it looks to me very likely that we will go and target 1880 going into Tuesday's session. And then, if we can break above the 50-day EMA, then we're likely to go and retest the swing highs up at around 1960. But of course, that's still a long way off. So going into Tuesday's session, I'm looking to see whether we can form a hammer stick at the end of today and on Tuesday to see whether we can continue the momentum and go and target the 50-day EMA up at around 1875 to 1880. I'm a short-term buyer, no interest in selling yet. If we did get a close below 200-day EMA, then I would become a seller. But the fundamentals are still very strong for the gold market, so I don't want to be selling this precious metal.